These things don't happen in a strong economy. I want to talk to you about the economic quickening. So many things are coming to a boil in 2024 that have been overlooked, faked, or ignored for so long, and they can't be overlooked, faked, or ignored any longer. I'm talking about conflict in the Middle East. I'm also talking about the stock markets. I'm talking about the discrepancy between how some people believe the economy is so strong, but other people tell you it's so weak. We're going to get into all of this in this video today.
A home run today. You and your team are rock stars. Andrew.
I won't say it was a good year, 2023. 2024 has the makings to also be a tough year if you're not watching the right kinds of things. That's what we're doing here. I'm trying to open your mind so that you see the reality of things so that you can make the best decisions for you. That's all we're doing here. Something that people might not know about me is that I work weekends, I work on holidays, and I work on, yes, even this, my 50th birthday today. But I love what I do. I put myself here, and I'm just super busy right now. So if you were to ask somebody on the street, how's the stock market doing? They'll tell you it's doing great. The stock market is going gangbusters. Sure, over the last year, it's been doing very well. But let me take a look at a bigger view. Let's look at a 2-year chart of the Standard & Poor's 500. Let's look at a 2-year chart of the Russell 2000. 2-year chart of the Dow Jones Industrial Average. The NASDAQ over 2 years. What's happened is that you're just now in all these markets getting back to where they were 2 years ago. If you bought 2 years ago, you were in a negative position for years since then until now you're just finally coming closer to where you started out at. If you bought within the last year, then you're doing pretty well. But if you bought 2 years ago, you're just a little bit less than breaking even right now. Here's the Russell 2000. You can see it's lower than it was 2 years ago. So is the market doing well? Yeah, lately it is. That's recency bias. Overall, the market is doing poorly. It's taking you 2 years to almost get back to break even. Same with the Dow Jones Industrial Average. And even right now, a lot of the technical signals are showing you that this might be a toppy market right now. There might be a downside move in the not too distant future for a lot of these indexes. Here's the NASDAQ over 2 years. The Russell 2000. The Standard & Poor's 500. And the other big story is about economic weakness. You understand there's parties in power who it's in their interest to tout all this economic strength because they want to get reelected. There's people who are trying to take over the spot of the winning politicians that they will benefit by exposing how weak the economy actually is. So you've got both sides of it. That's why you're getting so many mixed messages. But if you know what to look at, you can see exact indicators demonstrating how weak the manufacturing is, how weak the operating deficit is, how weak our trade imbalance is. There's a lot of indicators showing you that the economy is actually weakening significantly. And everybody feels it too. And I bet you'd be one of these people who can just, you feel it in your bones. You see it around you as you go out among society. There's an underlying subtle weakness that people are feeling. A lot of people don't have any money for an emergency. A lot of people are buried in debt with very little way of figuring how to get out of this debt, to get out from under it. These things don't happen in a strong economy. And people always conflate the stock market with the economy. So stock market's been doing well recently. So all of a sudden people think the economy is doing well recently. If the economy is doing well, we wouldn't be having this conversation. There's too much debt. It's unpayable. We've got these operating deficits that just grow and grow and grow. We used to be the manufacturing hub of the world, and now we are the consumption hub of the world. And that consumption has a cost. This is one of those things that's going to be coming to a boil. Eventually, it's going to be a point where either you recognize the economy is weak or you don't recognize that. But the people who understand the economy is weak, they see the reality of it. They're going to have a better understanding about how to make the right decisions to land on their feet, the types of things to invest in, the things to be cautious about. And in all of this, I think what's going to expose the final reality of the situation we're in is when the recession gets here. And what I think is going to happen is going to be the final moment where you get the reality of how weak the economy actually is. Besides the fact that we're going to have so many more bankruptcies than we're already having, besides the fact that we're going to have so many more defaults than we're already having, is that once we enter a recession, all the economic weakness will get exposed as the recession rolls through. And I showed you before, it's already rolling through. It's a rolling recession. Different aspects of the economy were affected by the recession at different points. Same with inflation. Different aspects were affected at different points. And of course, the big story that almost certainly is going to come to a big boil in 2024 will be an expansion of the war in the Middle East. There's already talk now of Israel invading Lebanon, the southern part of Lebanon, fighting Hezbollah. This is when they're done with Hamas. This means that this escalation of the war that the sides on both sides are talking about for so long, this means all this escalation of the war and everything that that entails and what that means is much more likely to be happening as we go into 2024 as Israel makes their next move. You've got Hezbollah, you've got the Houthi rebels in Yemen, you've got Iran, you have Hamas, all trying to escalate things with Israel. And I don't see any way how this conflict in the Middle East, which has been around with us for many decades, does not escalate now. This is the point where it all led up to this. 50 years, it's all led up to this point. There are so many ways in which an individual action by an individual group that makes a choice to do something could dramatically and instantaneously escalate all this conflict in the Middle East, which affects, besides human life and things that matter, it affects so many things, including the price you pay for gas when you fill up your truck. 2024 is going to be a story of recognition of reality. People are going to start to finally, truly see. There's a small sliver of population, a small group of people who understand things, like you guys, because you're here, you understand this. The economy is incredibly weak. And now we're at a point where everyone's going to get to realize what we already know. And then everything's going to change at that point. The flows of money will go into different types of assets. People will go into risk-off assets, things like gold, treasury bonds, utility companies, safer investments. You're not going to be going after a high-flying Peloton or GameStop stock. You're not going to be going after a high-flying tech stock, especially as tech companies generally have a lot more debt and they've got much higher carrying costs now because the interest rates are higher, as you see on your own mortgage probably. But either way, however you look at it, almost certainly interest rates will come down in 2024 a few times, maybe 3-4 times, and then more in 2025 and so on. Rates will be coming down. That's going to let a little bit of the pressure off. Now the question is, was that pressure up to this point extreme enough? And it was, just spoiler alert, is it extreme enough to cause us to go into a recession? Everybody's talking about a soft landing. Great, I hope we have a soft landing, but you have a soft landing, then you're still just waiting for the recession. It's inbound. It's coming. We are set up economically in one of the most precarious and most unsustainable ways that, as a species of people, we've ever created or established. We are in such a precarious financial situation, and I've been talking about it for a while. People are starting to see it now, and I'll get to be telling you that I told you so going into 2024. But this is not all risk here. There's tremendous opportunities because of all the chaos and commotion and friction going on. But a stock pick a few days ago was trading at about 75 cents or so, 72 cents, and it was trading at 80 cents already today. That's a good gain within a couple of days. This is a small company, the kind of stuff that we look at for the newsletter. Don't think that all this chaos means that you got to hide your head in the sand or keep your money under the mattress. There's opportunities bouncing all around like crazy right now. And when there's more commotion, there's more opportunities. And 2024 will be a year of commotion. It will be, in my view, the absolute economic quickening, where the opportunities get bigger and the risks get bigger. A lot of these risks are coming to a boil as we speak. A lot of these risks will be patently, widely obvious and known by the majority of people in 2024. Right now, it's a minority. You are among a minority because you're here, you're smart, you're understanding this stuff, you're seeing the reality of the economy. Now everybody else gets to come along and see it too. Just like they're doing with gold, and all of a sudden everybody's talking about how gold is doing so great and how great gold is. Yeah, this is the way it's been for ages. I've been telling you, and they're finally catching up with what I've been saying, what I've known for a long time. Same thing's going to happen with real estate. It's going to come down. Just don't go to sleep at the wheel. Don't think that you just sort of protect yourself and hide for a while until things get better. Now is the opportunity to strike. More millionaires were made in the Great Depression than any other time in history, except for that doesn't count anymore because of China. I think they had like 80 millionaires made every day or something. It's just too much. We really appreciate all the support. Some of you guys are joining the Peter Leeds Army, peterleeds.com/army. That is the most beautiful way for you to show your support, and it keeps us working super hard for you guys. Anyways, I wanted to say Merry Christmas, Happy Holidays, whatever you're celebrating, whatever type of holiday you're celebrating. Have a good one. Happy holidays, everybody. I'll be here in Detroit with my daughter Renee, flying in to see us. And Jane, the three of us are going to have a nice quiet Christmas here. It's going to be glorious and beautiful.
For once, I have the opportunity to be on the winning side of things. I was a financial advisor for 5 years from 1999 until 2004 and never heard the type of info that Peter gives us, the type of indicators he looks at which are non-traditional. He knows his stuff.